thank you very much, Dr. Koze. Thank you very much for this opportunity.
Yeah, we reduced our Japanese growth a little bit for this year. Like other open economies, obviously Japan is being affected by developments in the global trading system. That's one reason, because we are expecting actually global trade to slow down this year. In addition to that, we see weakness in domestic demand. Obviously, the food price inflation is quite high. When you combine the weakness in domestic demand and the weakness in external demand, that led to a forecast downgrade. But we are expecting Japanese economy to do better next year. Over the next 2 years, our growth forecast around 0.7, 0.8%. So obviously headline inflation is running quite a bit elevated, but in its last meeting, the Bank of Japan reduced its expectation of inflation for next year. Now, on the one hand, there is a slowing in the economy. On the other side, you have, by the Bank of Japan, the expectation that inflation will come down below 2% next year. So, based on the incoming data, the central bank has to make a decision. But when you look at market participants, this is not our forecast, the market's expectation, there is no interest rate hike in the cards this year. But ultimately, this is just, an expectation for today, and how activity will evolve, how inflation will evolve, that needs to be seen, and based on that, Bank of Japan will make its decisions. Now, uncertainty we have is quite high. In fact, in the context of trade policy uncertainty, we have the highest level of uncertainty we have seen since this data has been available. For this year, at the global level, we are expecting a slowdown relative to last year, and we downgraded our global growth forecast. And of course, we downgraded our forecast for about 70% of countries, advanced economies, emerging market, developing economies. What we are seeing is that uncertainty is affecting investment as well as consumption in many economies. Major economies' growth forecasts have been downgraded. We see a slowdown in these economies. So it's fair to say that between the kind of the elevated uncertainty and elevated trade tensions, global economy is going through a difficult period. Yeah, so we are not expecting a global recession. Global recession is really a drastic turn in activity. Our global growth forecast is much higher than what is necessary to see a global recession. What we see is a slowdown, and when we put that slowdown in context, the growth this year will be the slowest since 2008 global financial crisis, outside of these global recession years, 2009 and 2020. Obviously, it's a difficult environment, but at the same time, take, for example, the U.S. economy. U.S. economy, we are expecting a slowdown, like others are expecting. But what we have learned about the U.S. economy over the past 5 years, it has been, incredibly resilient. Labor market remains resilient. And you look at the euro area, there is a slowdown, but activity is still there. You look at China, we are expecting a slowdown, but still we are expecting China to deliver growth around 4.5%. So 3 engines of the global economy still running. Yes, they are slowing, but in the big scheme of things, there are challenges, but activity is still healthy enough to carry the day. So when we think about this slowdown and the growth outlook, risks are still tilted to the downside. What are those risks? We have still the possibility of further escalation of trade tensions. We have the possibility of a protracted period of elevated policy uncertainty. We still have very serious geopolitical tensions. We still have issues in the context of financial vulnerabilities, especially in developing economies with high levels of debt. So these are downside risks, and they dominate the outlook when we think about. At the same time, as you said, there is, the reason to be optimistic. What is that reason? When we think about what happened over the past 3 months, as much as trade tensions escalated, we see now those tensions have been moderating. Countries are talking to each other. There is dialogue, and there is this, I think, broader understanding of trying to solve these differences through negotiations. We will see how this will play out. At the same time, we are, optimistic about the technological change, how the technological change could translate into dividends with respect to productivity, how digital infrastructure, investment related to digital infrastructure could translate into better growth outcomes. Beyond that, when you look at, what's happening in the context of trade, yes, there has been significant turbulence, and no one can understate the gravity of the challenge we are facing. But global supply chains are still functioning; they are not collapsing. Countries are diversifying their trade, and you look at certain countries, you see still they are delivering strong growth rates. Take, for example, India, a major emerging market economy, delivering strong growth. Poland, delivering robust growth. Even countries that have, programs with the IMF and the World Bank, like Argentina, Egypt, delivering healthy growth numbers. So yes, there are reasons to be very cautious, to be very concerned, but at the same time, I think there are good reasons to be hopeful. Now, we have been going through a period of change in the global trading system, and obviously that change has huge implications when we think about the supply chains. But that process really, in earnest, started, I would say, 10, 15 years ago. The challenge going forward is to see the true landscape of global trade and have a good sense of what are the new level of restrictions, what are the new rules when it comes to cross-border commerce. With that, we already see countries are trying to diversify their basically trade partners. They are at the same time trying to diversify their exports, and so far supply chains have been remarkably resilient, and we are hoping that this pattern will continue. We will obviously move to a new equilibrium when it comes to global trade, new equilibrium when it comes to global trade patterns. Now it's up to the policymakers to make sure that that new equilibrium will come in a smooth, healthy fashion. Yeah, global trade has been a major engine of the poverty reduction, has been a major driver of cross-border technology spillovers, and contributed to global growth over time. Now we see trade growth slowing this year. We are expecting a recovery next year. The trade slowdown in global trade has started long before recent escalation of trade tensions. Now, what is necessary for policymakers to see that? Obviously, they would like to have larger markets for their exports. For that, they need to find ways to have agreements. We do see that in many regions around the world, in Asia, in Africa, in Europe, in Latin America. Countries are looking for, partnerships. They need to do that. They need to redouble their efforts in terms of reducing trade barriers. They need to redouble their efforts in terms of reducing internal trade barriers with respect to logistics, with respect to customs. And I think that nobody, no policymaker is denying the benefits of trade. Policymakers are looking for new markets to sell the goods and services produced by their countries, and they are undertaking measures to do that. And we are, in a sense, happy to see this renewed attention to reduce the trade barriers, especially within emerging market and developing economies. The services trade has become increasingly more important, and we see many countries are seeing the benefits of services trade, investing more in human capital development, investing more in logistics, infrastructure, transportation, tourism, and all of these are good news. Now, some of these will take time in terms of the types of fruits they bear. But I think that being aware of the challenge, undertaking measures, formulating policies, these are critical, and policymakers have been doing in many countries around the world.